Hello, Marius.
Hey, how are you?
Good.
So everyone has been missing you on Twitter. What's happening with you?
Well, like I said, 30 days. Um, I'm still holding tanker shares, and but I don't want to come back after a week or 2 weeks and then be like, oh well, the dude can't even stay away from Twitter for 30 days.
Yeah, that's right. What made you want to take the break? Just kind of got tired of talking about the tankers, or I mean, obviously you're still bullish, otherwise you wouldn't be holding it. But you just got tired of the social media?
Pretty much, yeah. Yeah, I mean, it's just kind of I needed to take a step back. The markets in general. you, the situation is just crazy all across the world. You've got the Nasdaq at all-time highs at the same time that you've got 40 million people unemployed. And I realized that central banks are expanding their balance sheets the fastest they ever have, and it's just a rocket ship. But you've got all these companies that literally don't have any revenue right now that are just, flying 10, 15, 20% a day. So it's just, I feel like tankers are in this spot where they're one of the only businesses being analyzed on their future prospects. And we're discounting uh, good prior earnings, and at least for VLCCs, good current earnings, and because things might be bad for an undetermined length of time. But if you look at GoGo in flight Wi-Fi, their shares are doing really well, while 95% of planes are grounded, and they didn't make money before this. If you look at casinos, Macau gross gaming revenues were again down more than 90%, about 95% year over year in May. So apparently, the market reality is just that people people don't care about what's the lifetime value of an asset, what's its role in the supply chain. The only thing that matters is a ticker and a narrative, right? It doesn't have anything to do with any kind of fundamental reality or accrued value. We can price software companies at 100 times future expected profit. We expect them to make a profit in 2 years, and we can price them at 100 times that profit. But a tanker company is a sell, even if the stock trades for 15 bucks and they added $7 to their balance sheet in the last 6 months, they're a sell because rates, oil consumption might not ever come back and rates might not ever be good again, right? So I just needed to kind of step back and kind of look at things without having all of the other noise of other people's input in the conversation going back and forth. And the conclusion that I've kind of come to is just that the entire world is going nuts right now, and nothing that's going on in markets and central banks, in the streets, none of it really makes sense. So, I've been collecting dividends on tanker shares, selling calls. Some of those shares have been called away. I did collect the dividend on 3/4 of my Euronav holdings, though. So only 25% of my shares got called away before I collected the dividend. Um, the dividends that tankers made are real. The cash flows that they made are real, but apparently the only thing that matters is the potentially bad situation for the next 18 months, even though all the analysts say super cycle afterwards.
But what I find interesting is that when it comes to the recovery, so you're looking at, companies that don't make any money, and yet they are getting bid up because of it's bad now, but it can recover, it could get better in the future.
Right.
But with the tankers we have good now, it could be bad, but why don't people look at the tankers to be like, hey, if there's a recovery, wouldn't there be recovery in oil demand? And wouldn't that be good for the tankers too?
Well, there's also been a lot of cheating on the cuts. I think after all was said and done, compliance on the oil cuts was like 73%. And that's just production data. The export data suggests that actually, there was the amount of oil shipped was much higher than the cuts would suggest. So I think what it really comes down to is nobody gives a shit about the data. Um, nobody really gives a shit about earnings or valuations. If they did, then Whiting Petroleum would be at zero, um, and casino shares would not be trading up. I mean, markets are almost flat year to date. Like I don't care how much money the Fed prints. Okay, I don't care how much money gets pumped into the supply. At some point, a company that was losing money before all this happened, and a company that is losing money is losing even more money now should be trending to zero, right? I mean, that's in any kind of objective reality. If these weren't public companies with tickers, then people would want to get out of that business, right?
Yeah, yeah,
If
absolutely.
Yeah, if the town that I'm in, it looks like 80-90% of the restaurants are going to go out of business. Now, if you can manage to survive that, then a restaurant could be a very profitable business in the future. But 80-90% of them are still not gonna make it. So if you have huge fixed costs, employee costs, you need to pay. A lot of these guys can't even afford to go out of business because of the labor rules. They have to pay liquidations, basically severances to their employees. So they can't even afford to shut down legally. They're literally just going to have to leave the country.
Yeah, yeah, yeah. So there's this disconnect between, reality, what's happening within these businesses, and what's happening with their stock prices. I mean, look at good examples of, maybe reality catching up a little bit with the stock prices is AMC and Hertz. Um, I
Yeah.
mean, I mean,
Good example.
AMC, it's kind of close to my heart because AMC was the first job I ever had. And yeah, I mean, if they have zero revenues coming in, and these are capital intensive businesses, they still got to make their debt payments, still have to pay the property taxes and all that. Well, if the revenues are going to stay the way it is, I just don't see how they can survive.
Right, but then again, another way to look at that is AMC has outperformed every tanker share since the March lows.
Right. Yeah, it's just laughable. Yeah, maybe I should take a 30 days off of Twitter too.
Right. So yeah, it's just kind of a daily casino of what's the narrative today, what's the story. It doesn't matter if the story or the narrative has a material impact on the underlying prospects of the business, the underlying earnings. I think we're just saying that in markets in general, it really doesn't matter what the underlying performance of the business is. As far as the stock price goes, maybe someday it'll matter. Maybe when they actually have to close their doors. But even in that case, Whiting Petroleum stock is let's see, I mean, their share price has tripled almost since they declared bankruptcy.
Yeah, wow. What are you doing with your tanker dividends? Are you buying more tankers with it, or sitting on it, or doing something else?
Uh, I paid off debt, so that
Okay.
might be a stupid thing to do when central banks are printing money, but I basically am just making sure that I've got no outstanding debt. I've got living expenses paid. I've got money set aside for employees. Um, so
Okay, so you run a business where you're responsible for other people's living.
yeah, yeah.
Is this a software company that you're running?
No, it's just basically local employees. I mean, I pay people to do maintenance. I pay people to there's one guy that I pay to just to maintain trails because I like to hike. So and giving people jobs,
Yeah,
uh,
okay.
essentially.
Okay. Now, obviously, you're off Twitter, you're off of social media, but uh, are you like actively following the news in the
Yeah.
tanker
Yeah,
market?
I'm reading this what the analysts say. I'm looking at the rates. I've been working on the tanker data website, so I'm definitely still following things very closely. The Aframax rates, it goes without saying, are awful right now. They're still okay on some routes. Uh, VLCC rates, I think, are still incredibly strong. Um, it's kind of amazing to me that it's the third quarter. The LCCs are still printing 50, 60, 70K per day for an 80-day voyage, and almost everybody out there is now just completely bearish on tanker shares. If this was 10 years ago and it was the second quarter and VLCCs were doing 50, 60K a day for 80-day voyages, I think people would be pretty excited. Fernley's in their downgrade, they said that they're expecting somewhere around a 40K average for seasonal for Q4. So if you just look at the averages now for the year, we're probably going to end out 2020 around 75K.
Yeah,
So
for 40,000 is a fantastic rate. I just did an interview with the Frontline CEO, and he was saying that um, their break even is like about 18,000. So 40,000 is wonderful.
well, he's probably not including some things in that break even calculation. Like that's probably doesn't include depreciation, for example. It's a non-cash expense, but um, that the point either way is it all comes down to a narrative right now. Nobody cares. I mean, you've got protests in 140 U.S. cities. People are burning cop cars and flipping stuff over. Everybody's sitting at home cashing government checks. There are 40 million people unemployed. This is literally one of the craziest times that any generation has lived in centuries, right? I mean, other than world wars, I don't think there have been far crazier times.
Yeah, I agree. Tell me about the tanker data website that you said you're building.
Yeah, so basically it just aggregates data from all the different companies, so you can look at fleet composition. What ships do people have in their fleet? You can compare them side by side. You can see, what are the current contango levels? 1 month, 3 month, 6 month. What are historical rates on different routes for different data providers? So, for example, people have pointed out a lot that Joachim will post, Galbraith's rates, and those will be significantly different from Potent rates. The reason for that is, these guys are looking at different routes, and those routes have different volumes, right? So the route on USG UKC route might be 20K. I'm just throwing out numbers. The route USG to east might be 50K. So if one person's using the USG UKC as a data point, the other person's using USG East, they're going to have very different perceptions of where the market's at. And then the other thing is actual trade volume, right? If the spot rate on a route might be 20K, but if only one fixture got done, that's the average for that route. Yeah, and then you might have another route where you had 10 fixtures done. So the route where 10 fixtures done is much more representative of where the market's at today than the route that has no traffic on it and the last done was a month ago.
Yeah. Okay. You mentioned that the VLCC's rates are decent, but then you said that did you said Afromaxes? The
Yeah, Aframax rates are awful right now. Awful.
why do you think it is versus VLCCs?
Well, I think VLCCs are more oil exports, and so basically the ship size is more. You need a bigger ship for like if you're Saudi Arabia, you're not going to book an Aframax to sell oil to China, right? You're going to book a VLCC. So I just looking at some routes today, AG East VLCC is last done is 78,000.
Yeah, wow, that's pretty good.
Okay. Last done AG UKC 27,000. West Africa USG last done 64,000. Then I go down to Aframax. Uh, I look at Baltic Baltic to the States 9,000. I look at Caribbean USA 3,700. So Caribbean USA, that's basically Gulf and Caribbean traffic. That's refineries in that area. Refinery cracks are terrible right now. Refiners are not making money. Which that's another money losing enterprise to bring up. That's their shares have been continuously soaring since March. Valero is back up to $70 a share. Valero was at $82 a share on February 21st. Apparently bad prospects only matters for oil tankers. For everybody else, bad is good.
Well, you see, that's the thing. When it's bad, the idea is that it can get good, right? When it's
Yeah.
good, the idea is going to get bad. It's just like when a Scorpio Tanker CEO was saying, uh, on at one of the conferences, the problem with your stock is that your rates are too high.
Right.
I mean, yeah, that's the thing with the tankers. Is like when the rates are too high, they're worried that they're too high. When they're too low, they say that they're too low. Yeah, you can't win.
Right. So, for example, if you go and you look at the Marathon Petroleum's website, you can see what the crack spreads are on different projects. So, for example, the crack spread in the USG on LLS is Louisiana Light Sweet is about in May was $1.09. So
Yeah, yeah,
I mean the refiner cracks are horrible. There's also really interesting to see all the disconnects in data points. You've got one set of guys that are saying, oh, storage is decreasing rapidly, and within 5 minutes of one person putting out a report, somebody else will put out a report that says literally the exact opposite.
Yeah, that's
So,
yeah, it is very typical of the shipping industry. Just, same thing. You can have one analyst being so bullish and the other analyst completely opposite. It's amazing.
right. So I think the whole Twitter break was a good thing because it allowed me to kind of step back and confirm I'm not crazy. Everybody else is crazy.
Yeah. How many days do you have left of your 30 days?
I think about 2 weeks.
Okay. Yeah, okay. Well, cool. Well, thanks for taking the time to chat with me. We'll look out for you in a couple weeks and yeah, anything you want to add before we wrap up?
Just the kind of the same things that I said at the end of our last call, which was the world is really, really crazy right now. Things are very, very uncertain. Your top priorities should be guaranteeing your medium and long term survival. This is, I think, the first time in my adult life that I believe everybody out there um, needs to worry about that. They need to worry about where they are, and um, basically, I'm saying I think you might want to do a little bit of prepping in some form or fashion because when financial markets disconnect so much from reality, if you're a Venezuelan, you don't care what the Venezuelan stock market's at this point, and if you want to see something interesting, just pull up a stock chart for Venezuela. Okay, look at the Caracas exchange. Uh, so right now, let's see, year to date, Venezuela's stock market is up about 265%, 265.8%. Okay, 30% of Venezuela's population has left the country. Another 30% is starving. Despite having the largest oil reserves on the planet, they are importing gasoline from Iran. So, what happens in financial markets and what happens in your life, it can be very different. You can't have 100 million Americans sitting at home uh, buying whatever the latest momentum stock is day in day out, while there are another 100 million people potentially having lost their incomes or their our dependents whose provider has lost their income. You can't have that situation and expect things to turn out well. And if you go through the history books and you look, through the generations, we're living in a historical blip. But a lot of those blips were pretty tragic for millions of people. Millions died in World War II. Millions died in World War One. Millions died in the Spanish flu. A lot of people starved in the Dust Bowl. The Great Depression went on for basically 10 years. The only thing that stopped it was World War II, which then killed millions of people. So uh, just try to think about where we're at in a historical context, and don't focus too much on where a particular stock price is today or where the indices are going. Worry about where reality's going. I think that's my big takeaway.
Okay, that's very well said. Well, once again, Calvin, thanks for chatting with me, and
Yeah, thank you.
yeah.
See you later.